I'm in Los Angeles for REIT World 2019, NAREIT's annual conference. Joining me today is Chris Benjamin, President and CEO with Alexander & Baldwin. Chris, thanks so much for joining us.
Thanks for having me, Matt.
Now, next year marks Alexander & Baldwin's 150th anniversary. Would you say that most of the strategic changes that the company has begun to implement have been completed at this point?
Yeah, I'd say so. We're very proud of the changes that we've made. We've accomplished a great deal. Not only have we simplified our business by moving out of many non-commercial real estate businesses, but we've also nearly quadrupled our Hawaii commercial real estate net operating income, which was a primary goal for us. And we've brought all of our property management and leasing functions in-house, really positioning us for future growth in Hawaii. Now, having said that, we do have some more things to do. We understand that we won't be fully accepted as a REIT until we're a little bit more simple. So we're focused on further monetization, particularly of our paving business and some of our residential projects. And once we've accomplished that, we think that we'll have accomplished and completed our transformation.
Great. And what were some of the factors behind the company's 19% increase in real estate revenue that you reported in the third quarter? And is that the kind of pace that you expect to match going forward?
Well, as much as I'd love to match that pace going forward, it probably will moderate when we get into next year. It was driven primarily by 6 acquisitions that we made earlier this year with the proceeds from a land sale from late last year. So as we hit the 1-year anniversary of those acquisitions, the total NOI growth will start to moderate. Having said that, we do have other very attractive growth opportunities over the next year. We've achieved year-to-date 5.9% same-store NOI growth. That's been fueled in large part by 7.9% releasing spreads and a 240 BIP increase in occupancy. So we feel that we're well positioned in the existing portfolio. And we're also undertaking some redevelopment and repositioning projects in our existing portfolio. I think all of these together will help support continued growth, but not quite at the pace of the third quarter.
And can you talk a little bit about Alexander & Baldwin's Hawaii portfolio and its focus and what makes that unique?
Yeah, you know, I think the first thing that makes our Hawaii portfolio unique is how we acquire most of the assets. The vast majority of our assets have been acquired over time through off-market transactions. And we're leveraging our local relationships in those acquisitions, and it allows us to identify unique opportunities as well as great value creation opportunities. And so I would say that's the first thing that makes it unique. The second thing is that we're very community-based. Our assets are primarily in smaller communities. They're supporting local residents and tenants. And so we're less dependent on the tourist trade, and we're less, I think, vulnerable to internet impacts. The last thing I would say is that we have a significant number of ground leases in our portfolio, and that positions us well to realize disproportionate growth in NOI as we either have significant resets in the ground lease portfolio or we are able to get back some of the improvements in the portfolio, which has been a good source of growth for us historically, and I expect it will continue to be.
Great. And finally, where are you seeing the greatest opportunities for growth as we head into 2020?
You know, I think that for us, growth is going to continue to be solid same-store performance, some redevelopment of existing assets, and we'll be finishing off building out the balance of a ground-up development that we've just recently built on Maui. We're probably going to be a little bit less acquisitive for the next year or so, as we're focused a little bit more on dispositions of non-core assets, non-core, I should say non-commercial real estate assets, as we look to simplify our story. In the future, we expect to be able to use operating partnership units for acquisition because there are so many assets in Hawaii that, frankly, we covet and that are long ownership, family ownership, and we think that the sellers, the owners, may be willing sellers under an OP unit structure. So those are some of the ways that we hope to grow.
Great. Chris, thank you so much for joining us.
Thank you.
For more from REIT World 2019, be sure to visit NAREIT's website, REIT.com.